Hi, my name is Julian Koma from Market Update Premium. We trade growth and momentum stocks, and today I want to show you how a good trading process could look like. But before we come to that, let's look at this important quote here. Victorious warriors win first and then they go to war, while defeated warriors go to war first and then seek to win. I think this quote is very, very good, and it describes how you prepare for the trading battle. So how do you prepare for the next week? And believe me, preparation is really the key. I say that over and over to my students and to my members. You have to spend more time with preparation. Then trading becomes much easier during the week. And on the other side, you are really prepared for the next success. So spend time with that, and a good trading process can help. So what does a good trading process look like? What are the important steps in a good trading process? I will go with you through all the different steps. Let's start with screen for stocks and prepare the watch list. This is weekend work. So spend the most time at the weekend with preparing your next trading week and identifying the right stocks. Go through all your stock screeners, identify the setups that meet your criteria, and be very selective. So only add stocks to your watch list that are really meeting your criteria. Limitation is another key factor. So you don't want to have 100 or 150 stocks on your watch list. That's too much. That's too much distraction. So instead, you want to limit the number of stocks, maybe to 30 if you are very good, or maybe 50. It's very hard to get down to 30 stocks, but 50 is another very good number. Then you go through your watch list and remove all the stocks from your list that are weak and that are not meeting your criteria anymore. You want to really have a clean watch list and a very clear focus. So this is something you can do at the weekend. Then you want to prepare the next trading week. And believe me, it's important how much time you spend with that and how efficient and how effective you work on the preparation for the next week. So many traders I had contact with that are struggling, they do not prepare their trading week at all. They jump into the war and then they start to fight. But if you prepare your trading week very good, then it's easier to execute your trading strategy and on the other side to become successful. So the first thing what I do and what I would recommend is analyze the market sentiment. You must make a decision if you should trade next week or not. The market trend model that I use and that I make available for my students and my members is a big help, because it shows you green, yellow and red signals to say if it's time to trade or not. This is a big help. If you do not have a market model like this, you can use other approaches, but you need to make a decision if you want to trade or not, if it's a good idea to place bets in the market and are there high probabilities to win or not. Create a focus watch list. You don't want to go through all the 50 stocks on your watch list every day in the upcoming trading week. No, create a list with just 5 names, maybe a maximum of 10 names that could trigger a buy signal or a sell signal if you are in a downtrend in the next week. And then set alerts. This is something which I'm doing a lot. I work a lot with alerts. I place alerts very close to the buy trigger so that I get notified as soon as the stock is setting up and coming close to my buy trigger. That makes it so easy during the week to execute your trading strategy. The same is true for sell signals. I place alerts close to a sell signal so that I get notified, and then I can also prepare myself mentally for getting stopped out of a trade or buying into a new trade. Then pre-calculate your entries and your position sizes for the next trading day. So if you do your preparation on Sunday, you want to be prepared on Monday. It's very easy. If you have 5 or 10 stocks on your focus watch list, you can go through all of them and easily calculate the right position sizes depending on the entry and on your stop loss. And then you can save the calculations in a document and put it on your mobile phone so that it's always available for you. Or you write it down on a notepad and then you take the notepad with you during the next trading week. So preparation is really, really the key. If you are a more experienced trader, you can do the most calculations in your head. That's what I'm doing. So I'm very fast at calculating. But at the beginning of my trading career, I was planning every trade in advance, and I took with me the notes and the calculation spreadsheet. Create scenarios for the stock market and your portfolio positions. This is really, really a good tip, and this is really important for me. So I always plan ahead what could happen in the next week. What will I do if the Nasdaq breaks out of a trading range? What will I do if the Nasdaq goes below the EMA 21? What will I do if a stock breaks out on the upside that I'm holding in my portfolio? What will I do if the stock breaks down? So, by planning these scenarios, even if they do not become true, you mentally prepare yourself for the situation and you don't have to act spontaneously anymore. So in that case, preparation is really, really the key. Another tip is visualization. I know that sounds maybe a little bit strange, but if you have planned these scenarios, you are already doing some kind of visualization. You can quickly go through these different scenarios in your mind. The brain creates the picture for you in the mind. And when you go through a situation in your brain, it's exactly like you will go through the same situation as in reality. The brain makes no difference. And this kind of visualization helps a lot for the next trading week if you are under stress, or if something comes up spontaneously, you're already prepared and you went through a scenario. It's much easier to execute your trades if you visualize them before. So this is preparing the next trading week, and do that really, really carefully. It is important to have a plan for the next trading week. I post my plans for my members, every Sunday, so that they know, okay, if I'm interested to buy more or sell something, or what are the key stocks I'm watching during the next week. Then spend some time with post analysis. Very important. Write down the trades you took in your spreadsheet or your trading journal. Write down the impressions and the emotions too, so you can add very easily to your trading journal another column, and in that column you write down how you feel about the trade, or were there anything which makes you upset about the trade. This is how you can learn how you react to certain price moves, or how you react if a trade behaves good or bad. So very important. Make screenshots and reflect your trades. This is something I'm doing on a regular basis. Maybe not every weekend, depends on how much trades I close during the week. But this is a golden source of information to improve your trading. I make screenshots of my trades, and then I put them into a presentation on my computer and I add notes to them. I really write down where I bought, where I sold. I write down what went well, what went not well. So, and over time I can learn so much about myself, but also so much about my own trading. Reflect your mental state during the last trading week. Very important. And in the beginning of my career, I wrote a trading journal for myself, or a trading diary. I wrote an entry for every day where I noted down the feelings that I had, the emotions that came up, things that went well, things that went wrong. I'm doing that on a regular basis even today, because it gives me so much insights into my personality as a trader, but also into my behavior. It's a very, very important thing. And analyze also your trading diary. So if you already write a trading diary, at the end of the week, go through them and summarize the most important findings. Learn more about a helpful trading mindset. So spend some time at the weekend, of course, but also during the week to work on your mental state of trading. So your mindset, that is really important. Watch some videos, not about technical things. This is really, really not the source of success, especially if you are a more experienced trader. No, I mean really about trading psychology and trading mindset. There are so many good videos out there on YouTube you can use, or you can listen to some podcasts, read some books, some articles. There are some great authors out there providing very good material about the mental side of trading. And the more time you spend with that, the more success you will have. But of course, you need to be a competent and skilled trader first before you can work a lot on your mindset. Portfolio position management. So go through your portfolio every weekend or maybe every day and create scenarios for each position. I already talked about that a little bit, but they must be based on your rules, right? They cannot be free. They have to be based on your rules. So if a trade goes down, maybe 7 or 10% from your buy point, you want to sell that. So this is what you can visualize in your mind when it comes to preparing scenarios for your portfolio. But you also want to go through the different positions in your portfolio. You want to adjust the stop losses so that you maybe put a stop loss to break even, or you want to adjust it a little bit to reduce the risk. You want to analyze your portfolio. Where are cluster risks? So cluster risks are risks where you have multiple portfolio positions in the same industry, in the same theme, or in the same sector. And maybe you want to reduce the cluster risk by selling 1 or 2 positions. I speak a lot about risk management in my video course. Does every position have the right size? So maybe some positions are too big and you want to reduce it a little bit. Or other positions are too small and you want to increase it on the next opportunity. Do you have to sell positions? Because, I don't know, you have not enough profit cushion to hold it through an earnings event, or maybe the position is not acting right, does not fulfill the rules anymore, and you want to sell that. And look at your exposure. Do you have too much exposure or too low exposure? When you are on margin and the market starts to correct, then you will have a deep drawdown. You really want to avoid that. So, and this is why, looking at your exposure and doing the market analysis, what I already said in the step of preparing the next trading week, is so important. You can connect both with each other, and then you can say, okay, the market is in a good shape. It's okay to be on margin. Or the market is not on a good shape. Maybe I have to reduce my exposure and go off margin, or even reduce my exposure more. And then, write down earnings dates from companies. Very important. So many traders are not prepared and surprised by earnings dates. So, but it's easy. You can find them out on almost every charting software, or on a website like Earnings Whispers and many, many other websites. Or you go directly to the investor relation website from the company and find out the earnings dates. And then you want to make a decision if you want to hold through earnings or not. That depends on your profit cushion in the stock. Analyze your equity curve. Especially more experienced traders can use the equity curve as a feedback tool. It's a golden source of information because it reflects how you trade. If you have a very volatile equity curve, you maybe are, over trading too much. If you have a very calm equity curve and it goes steady up, you're doing a lot of things right. So analyzing your equity curve every weekend is very important. So are you winning or are you losing? And depending on your equity curve, you can also adjust your risk. When you're winning, you maybe want to trade a little bit bigger. When you're losing and your equity curve goes down, then you maybe want to cut back exposure and trade a little bit less size. Then we come to the trade execution during the week. To be honest, this is the smallest part of the trading process. It takes me only minutes, that's it. I'm not thinking very much during the week about executing, so that means which trade I want to execute or not. So, during the week, you're just executing your pre-planned trades. So everything what you did in the preparation at the weekend, and maybe also during the week, if you update your focus watch list, if you update the entries and the position sizes you already pre-calculated, in the execution part, you just want to execute what you already planned. That's it. Then you want to maybe update some alerts and enter the orders. Entering an order is just a process of seconds. It takes me really seconds because I just open my mobile phone, the trading app, type in the number of stocks I want to buy, and then execute the order. And that's it. Then I'm setting another stop loss order or maybe some alerts, and then I get notified as soon as something happens in the stock. Write down the execution prices and check open orders. You can't imagine, but I stumbled upon so many traders who forgot to delete orders in the trading software. And don't laugh about that. So this is a common mistake. And then you get stopped into a trade, or you go short into a trade because you forgot a stop loss order. So in that case, you want to check all your orders every day if the prices are correct in the order, and on the other side, if there are orders available in your trading platform where you have no position at all anymore. And then write down the execution prices. You always want to know where you bought a stock. And then you want to reflect that. Did you buy that too late or too early, something like that? Because it's important also to calculate your stop loss. Let's look at the last part, learning and researching. Yes, this is a step of a trading process. You know, a trader should make learning one of the most highest priorities in the trading process and trading life at all. You always want to learn something. Even if you have 20 or 30 years of experience, you will learn something new about yourself or maybe some technical parts of trading, but that's it. At the beginning of your trading career, you will spend a lot of time, just learning about technical things in trading to become a competent and skilled trader. The more experience you have, the more you will spend time with mental things, mindset, psychology, mental state, fitness of your body, etc. Because there is the recipe for success when you are more experienced. So yeah, beginners should plan in a lot of time for learning. This is a crucial part because you need to ramp up your knowledge and also your skills. You want to train really as a trader to become a competent and skillful trader. Spend some time with learning about companies and stocks that you have on your watch list, but probably you do not know so much about them and their products and their services. I discovered for myself that it's very important to know what the companies are doing, because then I have more confidence in a position and I can hold it longer and I can trade it more easier. Research trends, themes, generate insights about them. It's important. I give you one example. If natural gas goes up as a commodity, I'm always looking at natural gas stocks and I want to know why natural gas is going up. But for that you have to spend some time with research. That's important. The same is true, if you stumble up on some stocks that have something in common, but you have no idea what is happening there and why they are going up. You want to do some research about them to identify some themes where you can benefit from. So, that is also a kind of preparation. Learn more about trading principles, mindset, focus on helpful knowledge. That's very, very crucial. So don't distract yourself too much. You want to spend a lot of time learning about things that you do not know. But it's important that you do not, learn about everything that is available in the stock market area. You don't have to know every indicator. You don't have to know everything about every crazy charting software or whatever. That's really not important, right? You want to get some knowledge about trading. You want to get some knowledge about trading techniques, maybe some indicators, but that's it. The more you strive for knowledge, the more it gets fuzzy in your mind, because then you have the paradox of choice. Then you have too much information that your brain has to digest. So if you decided already for a trading method and a trading style, then do more research about that type of trading style. And mindset, I already said that, it's also very, very important. So learn more about mindset work, and not only from the trading area. You can also look into sports. You can also look into other performance activities like poker, for example, or into the business world. There are some good examples that you can also use for your development of your trading mindset. Listen to podcasts, videos, read books. Spend some time with that. You can listen to some podcasts in your car, or if you take the metro to your work. You can watch some videos during lunchtime, whatever. So the more you spend time also with learning about trading, the more you will also become better at trading and also in the process of trading. All right, I hope that this short video helped you to understand what are the key points of a trading process, what is important in a trading process. If you want to learn more, you can also, of course, take my video course and how to become a growth stock trader, or you can join my community. I post a lot of educational videos and articles there too, but of course we trade growth and momentum stocks, and I'm generating also trading ideas there. So you can join a lot of passionate traders in my Market Update Premium community.